A very good afternoon, everybody, and warm welcome to this session, What's Next for Low-Value Cross-Border Payments. Whether sending money to friends and families or sourcing supplies overseas, consumers and SMEs are increasingly moving money across borders. In this 10 trillion low-value cross-border payments market, banks and other providers have a major role to play to meet customer needs. On one hand, we have correspondent banking evolving, along with services like SwiftGo. On the other hand, new models are emerging. Today, we are going to discuss how we can create a world together such that sending of a few dollars, yen, or euros can be efficient, fast, and frictionless. My name is Kevin Tay from Consumer and SME Payment Strategy at Swift. I'm delighted to be moderating this panel discussion today. And we have 4 esteemed speakers joining us, a great privilege. To my left, we have Gayatri Vasudev, Global Head of Cross-Currency Payments, JP Morgan. Next, we have Mazu Jean-Francois, Head of Cash Clearing Services at Societe Generale. Next is Petra Plompent, Senior Manager of New Initiatives at EBA Clearing. Last but not least, Simon Ong, Global Head of Financial Institutions Group at DBS Bank. So let's start the discussion. Jean-Francois, if we may begin the discussion with you today. As the Head of Cash Clearing Services, can you share your perspectives on correspondent banking? Why is that relevant to retail cross-border payments?
So at first, I would like to come back to what our mission is. Our first mission is to connect the world. And in terms of first perspective, I would say that it is extremely relevant and timely given what we see in the world. I mean, tenser geopolitical context and maybe the search for more sovereignty. In other words, I believe that we are the actors of the defragmentation of the world, and such a relevant mission, in my view, in essence, give us extremely good perspective because what we do is extremely relevant.
Thank you.
And back to maybe low-value payments.
Yes.
So beyond this first positive mission statement, I believe that the industry is at a kind of crossroads, if I may. Swift, the banking community, has proven its efficiency whenever we process high-value payment between corporates, for B2B. What we feel, and that is why we're together today, is that it is the moment to explore new territories, meaning B2C, C2B, even C2C for low-value payments. What I feel is that the volumes at stake are just huge, but gaining this business is not that obvious. And what I believe is that it is something that is for sure at reach, at the condition of pursuing the way that has been initiated a couple of years ago by the community through Swift GPI around several axes, which are speed, security, predictability, what else, and among many others.
So if I may ask a question, yes. So I think it's good that we start with the mission and the application into retail cross-border payments. But I do believe correspondent banking has also evolved to better address the needs of this segment.
Correct.
So can you share a little bit how has that evolution happened?
Yes. Well, with such a perspective, I believe that the key success factor will lie upon 2 things. The capacity to get success, to attract volumes, and then to better squeeze our fixed cost, first of all. And two, I would say operational efficiency, because at the end of the day, we all see the pressure around prices, and if we want to meet our end users' expectations, it is very true that we will have to to offer them better prices to be achieved through the decrease of our internal costs. So volumes and operational efficiency, I would say.
Thank you, Jean-Francois. So Gayatri, if I may turn to you, I think some of the evolution that has happened is along new services like SwiftGo. So speaking of SwiftGo, JP Morgan is aligning its Expedite product with SwiftGo to make it easier for clients to implement a low-value cross-border payment offering. Can you share with us your perspectives and your learning globally? Why are banks interested in this segment?
Yeah, I think if you look at cross-border payments, traditionally they were focused on trade, global trade, and on workers' remittances. That used to be the usual cross-border payments. That is rapidly changing. If you look today, there are many more e-commerce and gig economy payments. And today I can send a $20 cross-stitch kit for my mom, which I buy from a US marketplace, but that's been manufactured by some SME in China. And you're going to start seeing many more flows going from big B to small b to the SME segment. And if you look at the SME segment, their needs are not as evolved. They don't have as sophisticated abilities to send and receive payments. So they're looking for providers to do this. And if you look at this market, I think you mentioned the number of 10 trillion. There are studies that say it's above 20 trillion. So it's a large market. And it is also a market that somehow banks for a long time ignored, the low-value cross-border payments piece, because it related to workers' remittances. They thought it was not profitable. And also there were compliance concerns. But what's happened is because they're low-value payments, the liquidity requirements are lower. And so there are many more non-bank entrants that can come in and compete in this space. And a lot of them have done that. And they've provided really good integrated solutions. And so nothing succeeds like success, right? So you have a bunch of non-bank players using bank rails and making hundreds of millions of dollars in this space, and all the banks will sit up and notice that opportunity. But it's not just competition. You see that our customers, banks' customers, are demanding the same kind of experience that they see in domestic payments in the cross-border payment space. So that's why I think more people are paying attention to this segment, and which is why we've been very focused on it as well.
Thank you. So it's great that all banks are paying attention to this segment. So how do you see banks complementing and evolving along with SwiftGo to better address the needs of this segment with all the attention over here now?
Yeah, I think if you look at, going back to the old cross-border payments, the only game in town was wire payments, right? Using the correspondent banking network. That meant deductions, high cost, et cetera, because you had to charge a higher price because there was a lot of complexity and friction in that process. But with something like SwiftGo, I think that's a great initiative because it actually makes these payments cheaper, faster, better. There is no deductions. There is upfront pricing, so there's more transparency. There are SLAs on how quickly you can settle. So I think SwiftGo has gone a long way in terms of setting guidelines to make these low-value cross-border payments better. And as you rightly mentioned, we were one of the first banks to adopt SwiftGo. For any payments, for example, coming into the US, we follow the SwiftGo guidelines to make sure that those payments are low cost and settle in a timely manner. But we've gone one step further. And what we're saying is that if there are banks that utilize the SwiftGo framework and have bilateral relations with other banks, they can send SwiftGo payments. But if they don't want to sign up all those bilateral arrangements, then they can leverage our Expedite Remit network, which we had built because we have built out the last mile capabilities for all the major remittance destinations.
Great. Thank you so much for your sharing and insights, Gayatri. So now that we have a good understanding of correspondent banking and how SwiftGo is enabling this, maybe let's turn our attention to alternative models so that we have a balanced discussion over here. Interlinking of instant payment systems have been explored all over the world, ranging from the live bilateral linkages between Singapore and India, Singapore and Thailand. We have IXB that is being piloted between US and Europe. And we also have multilateral models, such as Project Nexus, which is being developed by BIS Innovation Hub. So Petra, if I may turn to you next. From EBA Clearing, I understand you have been deeply involved in the IXB project. So keen to hear your perspectives on how interlinking model can be beneficial to banks and end users.
Happy to tell a bit about that and just to get a common understanding. In IXB, as Kevin mentioned, we are connecting the Euro instant payment systems that we have, RT1, with the US dollar real-time payment system for TCH. And that we do on request of our users, banks like on my right side here, because as the drivers that you already heard, is the customer demand, the volume out there, the need to be able to address that and to offer solutions is recognized. And the instant payments that we have are very important building blocks. They are built for volume. They are built for low cost effective processing. And what we do with IXB is to link these payment systems in a way that the settlement is aligned. So rather than have serial processing, which you would have in traditional correspondent banking, we make sure that the payment can succeed end-to-end, very fast, very transparent, with a lot of information up front for the users, or unhoped for, it fails at every stage. And you don't have the investigations, the exception handling, all the processes that make it difficult to process at scale. So that's the benefit for banks. And as mentioned, the opportunity of the volume here is large. And with such an infrastructure in place, we would enable the industry to develop end-user solutions, meeting the requirements of transparency, speed, low cost, and all the information up front.
Thank you. So given all the benefits of such a model, do you see any challenges, and are there key learnings from what you have been involved in?
Yes, and as you already mentioned, we are quite advanced, and just maybe to complement, because I heard you mention, I mentioned myself, that we start with the euro and the US dollar corridor, but it's not a bilateral design. This is really meant to connect different instant payment systems. And once we have taken it further, it should be something that can connect different currency corridors. What we learned so far is that technology is not a challenge. We can do very fast payments across the world, very, very fast. There are differences in market practice, in some standards, but those can be overcome. What we learn is that you really need to do this together with the banks that are using this, so that you can meet their requirements and their user requirements. And also alluded to already, compliance aspects can be challenging. And that is, we know that there's a G20 agenda out there with the CPMI goals. And that's really something where the public sector can really contribute to ensure there's good alignment in the regulatory frameworks, so that can be as efficient as possible. And that will give the place, I think, for the industry to deliver the innovation and the end-user solutions that are needed.
Thank you, Petra. Simon, if I may turn to you next to provide a perspective from Asia Pacific. DBS has been involved in the live bilateral linkages between Singapore, India, and Thailand. So any further sharing, in addition to what Petra has shared, for the benefits and challenges of such linkages?
So in Asia, there's been a lot of focus in developing these local instant payment networks. I think by last count, there was about 12 across Asia. DBS is connected to about 7 of those. And Kevin, as you mentioned, there's been bilateral projects to connect cross-border interlinkages between these local instant payment networks. There's essentially 3 now that we have live from Singapore. As you said, Singapore to Thailand to PromptPay. Singapore to India and UPI, and now Singapore to Malaysia. And DBS is, I think, the only Singapore bank still that's connected to all 3 of those networks. And it's delivering, I mean, the benefits that, Petra talked about, instant and low cost. And it really works. I was on a holiday with my family in Thailand and, went to a store, bought a gift, went to my DBS Digi app, went to the instant payment screen, hit PromptPay, put in the merchant number and send, and it was instant. So it's got a clear use case in enabling these instant payments. I think the challenges, though, that we have is that, across Asia, there's diversity in governance and regulatory models, and it takes time to be setting up these on a bilateral basis. And so to really scale into a many-to-many type of model, this is going to take quite a lot of time and a lot of focus at the government level. We're seeing projects, and initiatives like Project Nexus from BIS to try and bridge this. And right now, I think the focus is going to be on ASEAN, and certainly from DBS perspective, we'll support the development of these. At the same time, we also see the need to not just focus on these instant payments, but also broader low value. I think the other challenge on the instant payment networks is also, fraud risk, and how we try to mitigate fraud risk in these instant payment networks is ultimately to cap the size of the payments. Right now, it's capped at about 2,000 Sing dollars, about the same, 2,000 Canadian dollars. And to be able to, I think, scale this further, there needs to be more comfort on developing the ways of mitigating fraud risk. I think, ISO 20022 will hopefully help support that development. There's a lot of work being done on pre-validation tools, which I think will also help, but some way to go.
Thank you. Thanks, Simon. I understand DBS is also involved in blockchain-based payment, which is another alternative model that I think is worth a discussion over here. So can you also share, based on the experiences of DBS, how do you see the benefits and challenges of blockchain-based alternative model in the context of low-value cross-border payments?
Yeah, so the blockchain technology certainly has the ability to bridge these challenges that I mentioned, both fraud risk as well as, on bridging governance models through the use of smart contracts. DBS, also JP Morgan, are part of the Partior network, which is really to create this efficiency in cross-border payments through the blockchain. But I think the challenges around this is going to be the investment cost, and it's complex to set this up. And so as the focus is going to be on developing the network density, and I think to begin with, given the cost that required for the infrastructure, really the focus is going to be on high-value payments rather than low-value payments in the blockchain space.
Thank you. Thanks, Simon. So having heard on both correspondent banking and some of the alternative models, maybe let's now turn to the audience and let's have some audience engagement with our first polling question. If I may invite the audience to participate in the polling, the first polling question is, what can correspondent banking learn from alternative models? We'll keep this on for 30 seconds, then we'll share the reflections. Right, now we have the polling results. Very overwhelming response on cost, speed, and user experience as well, if I may say. So with this polling result, Jean-Francois, if I may turn to you, to share your reflections as correspondent banker on how do you see this?
Well, honestly, a bit of surprise. In my head, I was thinking about user experience, which is close to speed and predictability. So I feel a little bit surprised by that. Maybe let me elaborate on my thoughts, if I may. Pretty often, new players or closed-loop systems, meaning that they're mastering their processes end-to-end, and in a way, without denigrating their merits, not at all. I just want to emphasize the fact that, with such a construction, it is a little bit easier to offer better user experience, speed, and predictability, I believe. Because the other way around, if you consider, what the banking community does together with SWIFT, we have done well. I believe that around 90% of cross-border payments are now going to the end, to the bank of the beneficiary within 1 hour, which is good. But the problem still lies in the credit in the account of the beneficiary, when the score should be around 60%, if I'm not mistaken. So this is, and at a moment when our end users doesn't really understand why there is still a big difference or a material difference in terms of speed between a domestic instant transfer and a cross-border payment. So that would be my first comment. The other one is around predictability. Thanks to these kind of systems, end users are able to do their market shares before sending a payment, which is a kind of benefit. And I would like to say that, it's not a lost battle. We have in France a leading player that is purely digital, whose motto is to be systematically the cheapest. And guess what? I have a colleague that recently sent a tuition fee for his kid abroad. He made this kind of market survey, and he finally concluded by this internet bank was the cheapest one. And the solution was behind an API-based solution, involving Swift on the outside of the transaction. So I would have said again, user experience, speed, and predictability.
Thank you. So with that, let's turn to our second question, the flip side, to look at alternative models. So can we have the second polling question, please? So on the flip side, invite the audience to participate. What are the key challenges of alternative models compared to correspondent banking? Same thing, 30 seconds. Here we have the polling results. Compliance is overwhelming at 75%. Our safety is pretty high as well. Petra, if I may invite you for reflections. This seems to resonate with some of the sharing that you shared earlier. So looking at these polling results, what are some of your thoughts?
I think, other than Jean-François had with the previous question, that this is quite recognizable, compliance standing out here. With IXB, I referred to it earlier, there's a world to win to really come to low-value payments in this area. What we see and what we want to implement with IXB, and it's also coming back to Simon's remark about high investments for very new models. I think what we need to do here as an industry is to use the building blocks that we have and that we have invested in, and bring those together in a smart way so that we can quickly and cost effectively achieve a basis for those new use cases for low value cross-border payments. And actually, that is the building blocks, like the instant payment systems that we are connecting. It also includes some of these building blocks that SWIFT has put out there that can be well combined with these new models, like the pre-validation, like SWIFT Go, but it also includes correspondent banking as one of the existing building blocks. Bringing instant payment systems and connecting them in a smart way really enables new use cases, while there will always be a very important role for compliance aspects, but also for liquidity risk management, where really the banks are best positioned, and well, not only best positioned, but also obliged to take a role there and keep that role.
Thanks, Petra. As we reflect on alternative models, I'd like to reconnect back to the sharing on Partio earlier. So maybe Gayatri, to ask you for your reflections. JP Morgan is also involved in Partio. So looking at these polling results, can you share what your reflections are with respect to such blockchain-based payments?
Yeah, I think the interesting thing is in Partio, it's banks like us, like DBS, that are part of Partio, right? So, and we have very stringent compliance programs. We have very strong governance frameworks. So I think in that example, compliance would probably not be the top challenge. I think, in fact, reach would be the big challenge for me, other than the investment dollars required, because the thing with blockchain is, and we believe in the technology, we are investing heavily in it. I think there are a lot of benefits of the blockchain. For example, because you can have smart contracts, you can have conditional payments, right, at scale. So if there is some condition that is met, then you execute a payment. So there's that. There's the ancillary services that can be built around the blockchain that can actually reduce friction. Because we talked about, for low value payments, you really need to reduce the friction. We can do that with things like, information exchange on the blockchain for things like account confirmations, et cetera. But beyond that, the problem with the blockchain is when you go off-chain. Is your last mile on chain? And if it's not, then you're really as good as your weakest link. So I think with all these kind of networks, adoption is the key for you to reap the benefits.
Thanks. So as we speak about correspondent banking and as well as the benefits and challenges of such alternative models, how do you see future opportunities for the industry to really come together, to innovate, to collaborate such that we can create this better world for low-value cross-border payments?
Yeah, I think there's a lot that can still be done. We've obviously talked about some of the challenges, et cetera, but there's a lot more we can do to make payments cheaper, faster, better, and safer, because I think cybersecurity and fraud are going to be the big risks in low-value instant payments especially. So in my mind, the way to get to this future is by investing in partnerships, technology, and really strong governance frameworks. So obviously, we spoke about the partnership between JP Morgan and SwiftGo. We've talked about the Partio partnership. So obviously, there are many ways in which we can collaborate, not just as banks within the industry, but also with non-bank providers and fintechs. I think it takes a village to do this. But beyond that, I think technology will be the game changer as we look at better APIs to get a seamless experience for our clients, as we look at digital wallets that provide convenient ways to make cross-border payments, or, for example, how we are using AI and machine learning to basically reduce the friction. So you can actually recognize patterns, to resolve false positives in sanctions hits, things like that, that will really enable all these transactions to go STP through the network and reduce the chances of fraud or cyber attacks. And I think that's going to be the key game changer as it relates to technology. But technology, because it will take out friction, can also address the profitability problem. in the old world, with high-value cross-border payments, we could charge more. Now our customers are demanding to pay less, right? So how are you still going to be profitable when you process this and invest more? And I think technology is going to be a key for that. So I think that's a piece around technology. And then finally, if I look at governance frameworks, we as banks have a lot of regulatory oversight. And I see that as a good thing when it comes to the future of low-value cross-border payments, because it then lets us build solutions at scale.
Thank you. I think 3 very important points, if I may summarize: partnership, technology, and governance. Sorry.
Yes, you did it better than me.
So if I may round this back to you, Simon, and to also have your sharing from the lens of one of the major banks in Asia Pacific, do you agree with Gayatri, and what other opportunities do you see for the industry to come together?
So maybe just to set a bit of context, the cross-border payment, global cross-border payment wallet for low-value payments is around 200 billion. I think it was a McKinsey report, and about 40% of that is Asia. And Asia, we're seeing, to Gayatry's point, fragmentation of trade flows, and with that comes fragmentation of payment flows. So there's been a significant opportunity in Asia, and with that opportunity has attracted a lot of the non-bank players into the Asia market. Now that has presented challenges as well for banks, right? And has required banks to really focus on innovation, ultimately to enable them to keep their customers, right? And support their customers as well in this low-value cross-border payment space. And we talked about earlier instant payment networks, but there's only so many use cases that really require instant payments. And given the challenges we talked about, it's going to take some time for a many-to-many cross-border instant payment network to develop, right? And front of center right now, I think, is on near real-time payments, but maybe not instant. To enable, both the banks and the non-banks to provide better customer journeys for customers in Asia, particularly in the retail and the SME space. We went through this digital transformation journey at DBS. We saw the competition that was coming in, and we decided that we had to develop our own low-value payment network to facilitate our retail and SME clients to be able to compete, right? With that low-value payments network, we then have seen how we can then enable that for other partners, both in the banks and in the non-bank space, and those that are looking to be able to particularly get access to low-value cross-border payment corridors in Asia, inbound and also within Asia and then outbound as well. And so, that's called DBS GlobeSend. It's basically been DBS's retail low-value payment network, which we externalize for institutional clients. So I think that's, to your earlier point, partnership is certainly key in this, and I think we see this space is the area which is going to develop, while the other initiatives that are happening in this space as well, SwiftGo, for example, you've talked about, I think is also going to be able to facilitate that, and DBS is clearly supporting that as the Sing dollar payment provider for your inbound payments into Singapore.
Thanks, Simon. I think that's a great way to transition to Q&A. So we are seeing a number of questions coming in. So maybe if I may just select a question and have the flexibility to direct that to one of you. So we have a question: how do you handle compliance, legal agreements, FX, and liquidity in borders? So if I may maybe invite Petra to share that from a market infrastructure point of view, and also have that sharing from the bank's point of view later as well, with one of the other speakers. Petra, for your reflections first.
I'll come to that question, but also wanted to tag on to a remark by Simon that not all use cases require instant payments, which is fully true. But you need instant payments for some use cases. And the benefit of instant payment systems when you want to make cross-border low value really happen, the benefit of these systems is that they are 24/7. And that's a great benefit if you want to do cross-border payments over different time zones still have that near real-time experience that you need for most use cases, and real-time or instant for other use cases to really enable new ones. So that's something to keep in mind when we talk about instant payment systems. It's at least in our minds always that it's 24/7, which is a great benefit. Coming to the question about handle compliance, legal agreements, FX, liquidity, very good points. These are indeed the important points that we need to solve for in low-value cross-border payments. Some of them you can solve if you really connect instant payment systems. Payment systems are payment systems. They have a legal framework. They have the arrangement around finality. So not developing a new payment system, not a new greenfield exercise, but leverage the payment systems, including the legal frameworks that they have, and then connect them in a smart way, can deal with quite a lot of these issues. Yes, there is still compliance. Yes, there is still liquidity, a risk, and that is where we see that connecting instant payment systems is something that needs to be done together with banks, together with the tasks and responsibilities that are dealt with in correspondent banking at the moment.
Thank you. And if I also might invite Gayatri, from the bank's lens, how do you see the considerations of compliance, legal effects, and liquidity in the same question?
Yeah, I think when you look at the domestic infrastructures for a lot of these payments, they are all different. They were not built by the same payment system. And so I think the challenge of interconnecting, and Petra probably is closer to it, but the challenge of interconnecting any infrastructure is around the legal frameworks, is around the regulatory guidance and the schemas that are required. But in terms of the other part of your question around FX and liquidity models, I think that's another important piece. How can you can have a real-time payments infrastructure, but if your FX is not done on a close to real-time basis, it's not going to be a real-time payment, right? So how do you make sure, and this is where I think technology really comes in for you to be able to do your FX and offer FX real-time rates on a 24/7 basis. That's why you need to get to really have an infrastructure that is able to be low-value cross-border payments on a near instantaneous basis.
Right, now let's have a second question. I'm just reading it off. Do banks have a future in low-value payments, controversial, versus fintechs who do faster, simpler, cheaper payments? So this seems to be directed at banks, so I shall ask one of the bank's reps to answer this. Jean-François, can we have your reflections?
Sorry, I like this one. So the answer is yes. The answer is yes. Maybe at first for a legal reason. My belief is that at the end of the day, there will be a convergence between these two kind of players. The same playing field aspect of things will one day or another become a reality, I believe. Same animal, same cage. In other words, as these two actors are in essence providing the same kind of services, I believe that there will be at what point a kind of convergence between our duties and rights. I believe. To be honest, I believe that even already banks have the means to compete. We have spoken about SwiftGo. You have spoken about your own offer possibilities. I've spoken about new API-based solutions possibly offered to our respondents. In other words, I completely see that correspondent banks have the possibility nowadays to offer to their respondents the means to be relevant, and competitive in their own market. Obviously, to do that, it's a matter of volumes because prices are at stake. But well, for sure, I believe that it's not a lost battle.
If I can just add, because I feel very passionate about this topic, most fintechs do not have direct access to clearing systems. They rely on bank rails. The reason they have become so competitive, and kudos to them, right? They've come up with a really good end-to-end customer experience, is because, frankly, the banks were sort of sleeping at the job, right? And now that the banks have woken up and they've come together to work on different models, I think this will start changing. And I think the amount we are investing in technology, for example, I think many fintechs can do that. So I think with that will come better solutions, and I do believe that we will be the leaders in this space.
Good, thank you. I think we are all for innovation, all for improvements.
If I can just add to that as well, Kevin.
Sure.
I think
everybody is passionate about that topic.
Yeah, and within my area, we cover both the banks and the non-banks, and I think the banks still benefit from having embedded incumbent client networks, right? Retail and SME customers that they have built up over a long period of time. And they also benefit from the trust that comes from being a regulated bank in whatever country they're operating in. So there is, I think, an inherent advantage with the banks in this. As has been mentioned, the non-banks have come in and they've really clearly innovated in this space. But there is still the ability for the banks to also innovate and also leverage the partnerships that we've been talking about through this panel in order to expedite that innovation journey.
Thanks.
No pun intended.
Anybody wants to add? Great. Maybe mindful of time, let's just have one last question before we wrap up this session. How can you scale up bilaterals beyond just 2 countries? Is multilateral model really possible? I think though we are all representatives of our organization over here, not really at a country level, but if I may invite Simon, I think being closest to where live bilaterals are sitting, to share your perspectives on this question.
I think this is kind of probably referring to the instant payment space that we were talking about earlier. And it's clearly challenging. I mean, we're seeing that from just the development that is happening by development of bilateral models, right? I think it will be really interesting to see what happens with Project Nexus, because the focus on that will be amongst a close knit group of ASEAN countries to see how to bring that together. But I think it's not without its challenges, but I think with enough cooperation at the government level, it can be achieved.
If I may add to that from our side, yes, I think it's achievable. You need to solve for some of the complexity in the middle so that you don't need to do that in every bilateral connection. But it will also need there need to be requirements for it. There need to be banks that want to support it. There needs to be sufficient value and volume in those corridors. But then, yes, you can definitely make it multilateral.
Great, thank you. So let me now try to draw this to a close. I think it has been a really insightful discussion. Thank you to all the speakers. On one hand, we have heard about the benefits and challenges of alternative models. And true enough, all these alternative models will continue to be explored globally. But on the other hand, correspondent banking is also evolving. And I guess we also do acknowledge that correspondent banking will continue to be the backbone to facilitate a lot of all these transactions and connectivity as well. So great. I think it is an indication that everybody has to work together to make this a less fragmented world. So if I may just invite the panel one last time, and let's do a lightning round to close off this session. For each of you to share a 1 to 5 words concluding takeaway from the discussion that we have. What do you make out of this topic? What's next for low-value cross-border payments? If we can start with you, Gayatri.
Payments without borders.
Very good.
Involvement of retail bankers.
Petra?
Evolution and not revolution.
And Simon?
Innovation through partnership.
Great, thank you so much. I think great innovation through partnership, a good closing to the session. Thank you to all the speakers, and thank you, audience, for your interaction.
Thank you.
Thank you.